Sometimes when someone comes to me to get a mortgage or buying a home, they'll say apologetically, I know it's a terrible time to buy. And that's because the media has convinced them that home prices and mortgage rates are too high. And I understand why people are concerned, because mortgage rates went up and mortgage payments therefore went up, and that hurts. So people think they should wait until mortgage rates come down. But in this video, I'm going to show you why FOMO, or fear of missing out on mortgage rates, can actually cost you even more money. Hi, my name is Nicole Hamilton, a home financing expert. Subscribe to my channel and you'll be the first to know when I upload a new video. Everyone has a friend who has a 3% mortgage, and everyone who doesn't have a 3% mortgage is jealous of that friend. But as I mentioned in this video, the period between 2008 and 2022 was the only period in the last 40 years where the mortgage rate has been below 5%. And no one wants to overpay compared to what someone else paid for the same thing. You don't want to pay more for a pair of shoes or a car or anything. If your friend bought Apple stock for 40% less than you did, you feel silly. But the reality is, if you're not already in a 30-year fixed rate mortgage, you're subject to the forces of inflation. And rents have gone up around 20% in the last 5 years. And comparing the current rate to the rate your friend got back, let's say in 2019, is just going to hamstring you, because the 3% mortgage rate ship has sailed. Waiting for old rates to come back will just cause you paralysis and prevent you from moving forward, making sound financial decisions and building wealth. So now I'm going to take you through how to contextualize the mortgage rate environment and get you completely out of the FOMO trap so that you can start thinking in just black and white about the financial facts and get yourself to the best possible future solution. Stay till the end of this video and I'll give you my free resource on how to map out your own path to homeownership in any market environment. The past is the past and we don't know what the future holds. It's unlikely that mortgage rates are going to go down because of a number of factors. The first being inflation. Inflation is stubbornly high. There's no reason that the Fed is going to reduce the Fed funds rate if inflation is still high. That's the reason why they jacked it up in the first place. On top of that, rates don't typically decrease significantly unless there's a recession, as you can see on this chart. This is a chart of all the recessions in the gray, and you can see the subsequent effect on mortgage rates. So what's holding you back is really relativism. It's the idea that the current rate is worse relative to what it used to be. But if we talk about absolutism, then the rates today are actually pretty good. Stay with me now. Across history, a 6% to 8% mortgage is absolutely average, or even 6% to 10%, as you can see with this graph. So let's rip the Band-Aid off. Yes, higher rates have caused higher mortgage payments, which makes it harder to qualify for a mortgage because the income levels are higher. So let's go through what happens if you were to buy today versus wait for an event that may never happen, like rates going to 5 or even 3%. Let's run two scenarios and see exactly what it looks like in black and white. Let's say you're renting in Tampa and then you're buying the same equivalent property. We want to make sure we're comparing apples to apples. So the average rent for a one-bedroom in Tampa is $1,587 a month, while the average one-bedroom apartment for sale is $227,000. If you bought an apartment with 20% down, your mortgage payment would be about $1,315 a month with the current 8% rate. If you put 10% down, your monthly payment would be $1,485 per month, including mortgage insurance for putting less than 20% down. It would be $1,674. Inflation is still stubbornly high, driving up all things, including rent and energy costs. But here's the thing, if you buy today, your mortgage payment, which makes up the bulk of your monthly housing costs, stays the same. It stays the same for the term of the mortgage, which is usually 30 years. So let's compare now over time what happens if you were to wait to buy a home if you weren't totally on board with today's 8% mortgage rates versus if you accept today's mortgage rates and buy a home. Based on industry data, rents have risen an average of 20% in the last 5 years. What if they were to rise another 20% in the next 5 years? Then we're looking at rent payments of around $1,900 in 5 years, $2,200 in 10 years, and 2,715 years. Meanwhile, if you were to buy a place, your mortgage payment, even with the 8% mortgage rates of today, which as we noted earlier are pretty average based on historical trends, will keep your payment at $1,674, even as every other cost in your life is likely to increase along with future inflation. And by buying, not only will you keep the bulk of your housing costs fixed for 30 years, but you'll also build equity every year so that by 15 years from now, you'll have built $24,000 in equity just from paying your mortgage, which doesn't even include equity from home appreciation or your down payment. So just to recap, the mortgage rates today are pretty average. There's nothing unusual about them. So I say work with what you've got. Don't dwell on the past, do your homework on the present and develop a better future. It just pays to move on. Inflation is still stubbornly high, which causes everything to increase. All the better reason for you to get yourself into a 30-year fixed rate mortgage where your housing costs, the bulk of your housing costs stays exactly the same for 30 years. What's a better antidote to inflation than that? Having FOMO, waiting for rates to fall, may end up costing you a lot more money. And that's not emotions talking, those are the cold, hard facts. And if you need help figuring things out, give me a shout. My contact information is below, and I love to help people. And just remember that the news runs on sensationalism. So they might tell you that X, Y, and Z is going to happen, but what you want to do instead is break out your own calculator and make your own decisions because your future is yours. If you want to find your best path to home ownership, use my free resource, The Formula for Home Buyers. You can find it at the link below.